Hey, it's Tyrone Jackson, a wealthy investor, back again with another hot WI Trade School instructional video. I've been getting a lot of questions about Nike stock, and I want to take this opportunity to address two stocks in the same market. And when this happens, we call this diversion because we have two stocks in opposing positions. So I wanted to alert you as to which stocks I think you should own for the long term, for the short term in this video. So let's get right to it. I wanted to show you here Nike stock. Now, this is, you know how we always look at things in the Wealthy Investor Program from the long term first. We call this the long term trend. Here we're looking at a 5-year chart of Nike, which, by the way, is also a member of the Dow Jones Industrial Average. You know that we tend to trade and invest in Dow stocks before anything else. And if we scroll down here, we see that Nike also pays a dividend of 64 cents a share annually divided by 4, of course. But this long-term trend has meant for the past 5 years, Nike stock has been an excellent hold or post-split. You see that it's split down here and then it's split down here. Post-split, I like to ride them back up to $100 a share and trade them as a covered call, right? Because that way you're making money every week, every single month off of the stock. But the thing that I want to pay attention to here is this long-term trend, and the stock has actually risen in this recent pullback. So again, 5-year chart, right? Remember, we don't marry stocks, we only date them. And this 5-year trend looks good. But what's disturbing or what's causing an issue is this 6-month chart. This short-term trend. See how the stock is dropping? And what most people don't understand right now is the reason for that. So I want to explain that to you. Why this stock is in a short-term downtrend, but its long-term is still upward, and what you should do. All right. So in the Wealthy Investor Program, I'm constantly encouraging you not to buy the stock unless you understand the story. I'll say it again. Don't buy the stock unless you understand the story. And what does that mean exactly? Well, things in the stock market change and companies change. Nike is known for its primary products. Michael Jordan, sneakers, now LeBron James, with LeBron being the champion of just about everything, has meant an increase of product awareness because LeBron's association with Nike, right? However, and this is the big thing that causes the shift in the story. Nike distributes its sneakers, its apparel, its tennis wear through what? Stores like Sports Authority, which are now going out of business. So the issue for Wall Street and for investors is Nike's distribution network. In other words, where is it going to sell all of these sneakers and hats and t-shirts? And that's putting downward pressure on the stock, because when you have most of your distributors going out of business, it's going to affect your top line revenue. Now, I cover that in other videos, so I won't get to it here. We've seen slight declines recently in Nike's top line revenue, but what we're waiting for is some sort of indication of how they're going to distribute their apparel, goods, and sneakers and everything that represents their brand. Because without that distribution, how are they going to make money? And the reason is people aren't going to malls so much anymore. They're shopping online, and Nike has a weak online distribution strategy. So I'm not telling you that Nike is done for. We need to hear from the company more about their distribution strategy, particularly in the fourth quarter, where they make like 30 to 50% of their annual sales. So I don't think Nike's really a good buy right now. Unless, of course, you bought it in the 40s and you can sell it, because Wall Street, remember, here's one of the things we always focus on in the Wealthy Investor Program. It's not only stocks that we like, it's stocks that Wall Street likes. Like, the big institutions have to like them as well. And if they're selling the stock off, it doesn't matter how much you fall in love with your date. If Wall Street doesn't like your date, your stock is going to go lower. So remember that. Now, contrasting to that, there's Amazon.com. So look at Amazon.com's share price over the last 5 years. You see it started down here at 185. If you're a member of Wealthy Investor Trade School, you know how I feel about stocks that cross 100. Amazon fit that profile a long time ago. And here's the stock that's actually rising over the last 5 years. It's always had some volatility in it, which is what this is. Volatility, of course, is the rapid price movement of a stock. And you notice that it is certainly there, but in the long term, the trend is up. 5-year chart. Now, let's look at a 6-month chart. Notice that Amazon has bounced off a bottom here and it is rising significantly. Now, let's just step back and look at tail of two stocks. The same stock market. Here's Amazon for 6 months, and here's Nike for 6 months. So you can't say it's the market. It must be something in the what? In the story. Amazon's story is good. Now, listen to this. Because people aren't shopping at malls, or they're shopping at malls less and less, and the generation that's coming behind you and I are only going to be accustomed to shopping online. Who's the number one retailer online? AMZN. ZN. Amazon. That's why the stock in the next 6 months in the last 6 months is trending higher and will go higher ahead of the fourth quarter. So what am I trying to teach you? That when you like a stock, it's not enough. Wall Street has to like it as well, because they're the ones who really push the stock higher. If you buy 100, 200, 300 shares, you're not moving the stock. But when you start to buy 150,000 shares every time the stock rises $10, well, you're going to be contributing to pushing the stock higher. And who does that? The institutions. So this story shift, not having a distribution plan because people aren't going to malls to buy as much, and being the number one distributor of products and services online, which is Amazon, you're going to see this stock rise. Okay? So don't buy the stock unless you understand the story. Stories change. And just so you know, for those of you who might want a little help, that's what I go through at WI Trade School. We're in a market right now that is really shifting. And as these stories shift, the stocks that you should own are also shifting. So if you'd like to follow my trades, the stock that I am trading, and the stocks that I am owning for the long term and that I think you should own, you should start your WI Trade School membership right now. And that way you don't have to wait for another one of these videos to actually appear and show up in your life. Hey, listen, I'm hoping that this idea of holding on to stocks that Wall Street likes really help you. The goal, as always, is to support you in both your what, your trading, and your long-term investments so that you build a portfolio that keeps wealth and residual income accumulating for you.